Okay, so in this video, I want to talk to you about private mortgages. I feel like there's not a lot of information out there. I feel like it's really actually important to know what private mortgages are. Hopefully it demystify it and remove a negative connotation towards private mortgages. And if you ever need it, that you can tap into it. It's good to have in your arsenal when you want to expand your real estate portfolio. In fact, before I get into it, the most savviest and the biggest real estate investors know about it, tap into private funds, as well as the biggest developers, so companies that are creating all these condo projects in the major cities. Oftentimes they can't get money through traditional banks and they tap into private funds. So in a nutshell, from a borrower perspective, it is costlier to tap into private mortgage funds, but if you know that the return is there, it's definitely worth it. Okay, so with private mortgage funds, if you can't get money at a bank or credit union, there is an option to tap into private mortgage funds. Private mortgage funds are essentially a collection of investors willing to lend their money at higher rates than what you can get at a bank. So right now for a bank, you can get a mortgage at 6 to 7%. With a private mortgage right now, you can get it at, let's say 10 to 11%. So that's what the delta is. With private mortgages, typically it's only interest-only payments. In terms of the loan to value, so with investors typically will give about 80% of the value of the property in major urban cities, and in smaller towns, anywhere between 50 and 75%. So it's lower in smaller towns. There are fees associated with private mortgages, so that's where you have to kind of assess and see if it's worth it for you. So there could be anywhere between 1 to 5% maybe of the mortgage amount, as well as you're paying for the lenders typically their legal fees as well as your own, so you're looking at maybe $3,000 there, as well as the appraisal of the home. All that private lenders care about is, one, the borrower's ability to pay back the loan, and two, is there enough equity in the deal should the borrower not be able to pay back the loan, that they're protected for the asset that they're loaning to. So private mortgage, if you're, for example, if you're buying land, just land, if you're want to do renovations for your home, if you want to buy more property, if you have a pre-construction that's coming and you can't close, these are all good reasons to tap into private mortgage funds. And like I said, at the end of the day, it is a costlier option, but if you know that the return is there, it's a great way to leverage and to expand your real estate portfolio. I have private mortgage contacts throughout the country. I've done deals throughout the country in big towns and small towns. So if you ever need private mortgage funds, reach out to me and I'll be happy to help. Something I want interesting to note as well, with private mortgage funds, it's important that you can set the terms. So for example, if you know that you're gonna be able to pay back that loan amount in a short window, you can have an open term. And that way you can pay back that mortgage without any penalty.